Oh boy, what's up everybody? Welcome to today's class. I am incredibly pumped to be talking about this topic, cat deployments, because I just feel like I'm so good at them, right? So welcome everybody. Thank you for joining me today for our class, how cat adjusting and how to crush your next deployment. I'm Jeremy Redding with Adjuster University. Thank you guys for tuning in. Thank you everybody that's tuning in from our YouTube channel at Adjuster University. If you're not a part of our YouTube channel, go ahead and check us out. Remember to subscribe, hit the notification bell so you get updates whenever we do a class like this. If you're coming in from the YouTube channel, make sure that you jump over to our Facebook group. We have the best group of independent adjusters that are out there, just a group of positive, forward-thinking individuals. Go check out the Claims Adjusters Success Network on Facebook, and be sure to follow us on Facebook, Adjuster University. Follow me, Jeremy Redding. Let's connect. And without further ado, guys, this one's gonna go on for a little while because I could just tell that I'm gonna be super pumped about this. I have a lot to say on this topic, so hopefully this won't last too long. So, this lesson is on cat adjusting and how to crush your next deployment. I wanted to emphasize crush right here, so I made sure that the lettering was real thick. Now, cat adjusting. All right, if you're trying to become a field property adjuster, or maybe you already are a field property adjuster, then you know about cat adjusting, okay? If you know about cat adjusting, then you know that there is much more upside, financial upside, to being a cat adjuster opposed to just a daily adjuster, an adjuster that's just working a local geographical area, doing things from pipe breaks to broken water heaters, fires, theft claims, and all that sort of stuff. What's great about cat deployments is that you're typically just doing the same thing, the same peril over and over again, maybe two perils, something like that. But what's even greater is that it's a much greater volume of claims right at the very beginning, so you can fill up your schedule, have tons and tons of work, and often than not, you're going to receive more money for those claims in the form of an increased percentage, an increased commission, if you would, for those claims. And on top of that, most of the time, you're going to be working claims that have a generally higher gross value. So you're going to be able to get a larger estimate and ultimately more money for the work and services that you provided. So what we're going to talk about here is how to crush your next deployment. There's a lot of adjusters out there, particularly the new ones, that don't know necessarily how to crush it. They're just happy to be working, happy to be out there, happy to get a call, happy to have the opportunity. This lesson is not about how to get an opportunity. It is somewhat about how to get an opportunity, but not to be complacent in that opportunity and how to look at cat deployments at a much broader scale. So, let's get started. So first of all, the first thing that I want to talk about here is a few key fundamentals about cat deployments. When is cat season? Cat season does not start June 1st. Hurricane season starts June 1st. Cat season is all year long. There are cat deployments that go on for an array of different reasons. From hurricanes, from big hailstorms, from winter storms, the list goes on. A cat event is just an abnormally high uptick of claims. Insurance carriers will identify a cat event based on their own terms. Now, obviously, the most talked about cat event is going to be your hurricanes. Those are the ones that get the most airtime on TV. Those are the ones that we hear about the most. And those often do create the largest claim volumes. So we will reference that, hurricanes, a bit more through this class. But just as a threshold, just remember that cat season does not start June 1st. Cat season is all year long. Don't strategize yourself thinking that, okay, well, cat season doesn't start until June 1st, so I really don't need to work on my resume or my marketing skills until sometime mid to late May. No, you need to do that right now because cat season is all year long. What is a cat event? I just described. A cat event is any abnormal uptick in claims. If a hailstorm hits an area and there's significantly more claims in that area than normal, then carriers can describe that as a cat event. Okay, same thing goes for excessive snowfall, same thing goes for excessive freezing weather, goes on. Now, how long does a cat last? This is a very common question that's asked by adjusters that have never gone out during a cat event. And unfortunately, it's a very loaded question to answer, and we're going to be digging into that a bit more. But generally speaking, when you wonder how long a cat event will last, what you have to remember is that there's a few different factors that go involved. The cat event itself will go on possibly for years, depending on the event itself. Large-scale hurricanes will go on technically for years and years and years, most likely than not, well before you already went home. So the cat event lasts a while. But the big question, the question that most people are really meaning to ask is, how long will I be a part of this cat event? And that's highly dependent on you, the person. It's dependent on you and the quality of the product that you deliver. It's dependent on what independent adjusting company that you're working with, what company, if not an IA firm, then what other company are you working with? If that company is receiving their work through an insurance carrier, then it also depends on that insurance carrier. And it also depends on the relationship between the insurance carrier and the IA firm. And of course, it depends on the relationship of the IA firm and you. If those factors all involved will determine how long you stay on the cat site. For an example, you could be a brand new adjuster that has trouble listening, trouble learning, and that is reflected in the quality of the product that you deliver. You go out on your first cat event, and you are delivering a work product that you think is fair, but the independent adjusting company that you're working with does not. They don't like the quality of your work. You're getting constant rejections. You're sending in your files late, which at first might not be a huge deal to them because realistically they're understaffed and they just need people to inspect losses, send in reports so that they can bill the insurance carrier, and they'll fix whatever mistakes that need to be made later, probably after they send you home. Because at that point, they will, sooner rather than later, send you home. Now, flip side of that, you could be a great adjuster out there on your first or maybe your 10th or maybe your 100th deployment, handling claims and handling them well. And unfortunately, within a month of you being there, you're sent home because the insurance carrier does not have enough claims to warrant enough claims to give to the company that you're working with. And the company that you're working with, has too many other adjusters already there, and then they have to send you home. Or the insurance carrier may just not have a lot of policies in force in that area that you're working with. Or maybe they do, but they would rather work out and nurture a relationship with other independent adjusting companies that they have, larger ones. So they're going to send all their claims in that direction. And because of that, the IA company that you're working with is going to send you home because they're just not receiving the level of sales that they were initially expecting. So there's a lot of different variables that go and that get involved in how long you're going to be a part of the cat event. But don't worry, we're going to do our best to figure out how to crush your deployment despite all of that. So let's work together here. So how are you not going to crush it when it's the pre-event, during the event, and post-event? So let's think. Let's think of some things together of how you will not crush it on your next deployment before the deployment even happens. So this is we can start even before the storm system develops. What's going to stop you in your tracks from crushing your deployment before that storm system even develops? Well, number one thing is that no one knows who you are. No one knows you. All right, so what does that mean? That means that you yourself, you are the product, and nobody knows of your product. Nobody knows who you are. In order for you to get an opportunity to be thought of for a deployment, the people who are deploying need to know who you are. They need to know your contact information, at minimum. Even if you don't have experience, even if you're not confident with your resume, whatever the case is, none of that really matters at this point, because if they don't know who you are, you're not going to get a phone call. So you need them to know who you are. Number two, very similar, not enough people know you. This is one of the most common things among independent adjusters. They get on a couple rosters and they think that's it. Sit around and wait for the storm. Let me tell you right now, there is nothing that irks me more than when I see independent adjusters tell me that they're waiting for the call, waiting for the storm, or even worse, recommending to newer adjusters that that's just what you do. Get your license, get your certification, sit around and wait. Yeah, wait to get lucky. That is not a good business model. You will be stopped dead in your tracks if nobody knows who you are. And if somebody knows who you are, then somebody else needs to know who you are. You need to know as many people and they need to know you. You need to have your name spread around the entire industry. Now, if you're new to independent adjusting, let me show you what that looks like. Once a storm system develops, particularly a storm system that's aimed, a hurricane that's aimed to one of the Gulf states, you will start to get a massive amount of emails. You should start getting a massive amount of emails in your email inbox. You should start getting phone calls as it approaches from companies that you've never worked for before, because all they want to know is whether or not you are capable of deploying with them in the event that something comes of this. Okay, something comes of this storm. So you will not be crushing it before that storm hits unless you receive at least 75 minimum, absolute minimum notifications in your email inbox or phone calls. Okay, the worst thing you want to do is be sitting there watching television, watching a storm about to hit land, and you haven't gotten an email yet. If that's the position you are in, you have an extremely low likelihood of being deployed because you didn't even hit anyone's radar as a possibility to be deployed. At that point, once that storm's hitting the land, those IA companies are getting ready to rake in big bucks. That is a big time for IA firms. So they need to know that they're fully ready, that they have boots ready to roll and help them make money. So if they didn't reach out to you at that point and make sure that you can be a pair of those boots, then they probably aren't because they don't know who you are. So, pre-event, nobody knows you, not enough people know you. Number 3, you will fail if you don't have any money. Here's the deal. You have an opportunity to make a lot of money. We're going to go over this more at the very end. You have an opportunity here during a CAT event to make a lot of money. Independent adjusting itself, despite what some people may tell you, with the amount that you can earn as an independent adjuster, the cost of entry is incredibly low, insanely low. People will complain about the cost. People will complain about anything. People will complain about the cost for licenses because it's like a couple $100 a license. They'll complain about the cost for certifications, a couple $100 a certification. People will complain about the cost of insurance. It's like $1,000, $1,500 for the year. People will complain about the software that you have to use, $200. Okay? People will complain about a lot of things. But you have an opportunity here to make over $100,000 in a single month during a CAT event. You need to have money ready to go. And if you don't have cold hard cash, you need to have a credit line ready to go. Credit line of probably like $5,000 to $10,000, something like that. Because here's what you got to remember. It's going to cost you more money to travel out and handle claims than it would if you're doing it in your local area. That being said, you need to be able to dish that money out. What are you looking at? You need, obviously, gas. You need a vehicle that's going to get there. You need all the equipment, but you already should have had that if you're trying to become a field property adjuster. But what are you going to need extra? You're going to need additional gas money. I mean, if you're living in the Northeast, if you're especially living in the Northwest, and a storm hits Florida, and you're living in Washington State, you better have the gas money to get yourself all the way down there. Okay? Or if you don't want to do the driving thing, you better have enough money for airfare going from Washington to Florida and car rental, truck rental money to pick that up and to get your new ladder, to get everything that you need and get to your Airbnb and get to your hotel, which you're going to be staying at. If it's a massive event, there's going to be a shortage of them, of accommodations, depending on also where it hits. So you need to have, and if there's a shortage, you're probably not going to get the best pricing out there. You're going to be paying a premium for wherever you stay. You might be paying over $100 a night to stay at a 3-star hotel. And that's just what you got to do. Because even at $100 a night, that is $3,000, that's a couple thousand over the month. Yeah, it kind of stinks. But listen, that's what you're there for. You're there to make big money. $3,000 is nothing compared to the amount of money that you're going to lose by not having enough money ahead of time to get yourself to that CAT site and to make your CAT money. So no money is going to stop you in the tracks. So let's say you've got money. You've got $5,000 to $10,000 in the bank, or you got a Capital One credit card that you've been waiting to use. All right. You've marketed yourself out there. Several people know you. How many people should know who you are? You should be on, I say this to everybody, you should be on at least 100 rosters. That's the minimum. There has to be at least 100 companies that already have your information. Because listen, out of those 100 companies, not all 100 of them are even going to have a contract for CAT claims. They're not even going to be, all 100 may not necessarily even be in the affected state. One of those companies may just be bigger in the northern states. So that company's not going to help you right here. That's okay though, because in a few months, when the winter storms come, they may be knocking on your door. But we're not in winter right now. We're in the summertime. We're in hurricane season. So we need at least a minimum. I tell my students, sign up if you have access to our 500 firms. There's no reason why you can't take one adjusting company per day and get a hold of them and get onboarded with them. Realistically, you can do 500, all 500 in a month. You could probably do it in a couple weeks. No reason why you can't be doing that. If you have access to the list, use the list. If you don't have the list, get on Google. Get on Google and find companies. Each one of those companies has the possibility of making you over $100,000 this year. Maybe a few. They're just waiting for you to find them. So, nobody knows who you are. Not enough people know who you are. No money. Those are going to stop you dead in your tracks. But if you can overcome these three, then what's next? What is your next step? Well, here's a big one. Dictating location. Listen, I want to say at least 90% of adjusters, they don't do this. You dictate your location. If there is a storm that is hitting the panhandle of Florida, a hurricane coming to the panhandle of Florida, and you have a company that has reached out to you and expressed interest in you deploying with them, if you don't tell them where you're going to be working out of, they will tell you where you're going to be working out of. And they don't care if that location does not have the most damage. You want the most damage. You want the highest paying damage. They may already have enough resources in a certain area where they say, well, we don't have enough resources inland a bit more. We don't have enough resources west of the storm. We don't have enough resources east of the storm. So we want to make sure that we, the IA firm, are fully spread out. Whether or not we put people in unlucrative locations, that part doesn't matter. What matters to the IA firm is that they have a widespread area of coverage so that they can adequately service the needs of their client. Okay? That's what they should be doing. But that doesn't necessarily mean that's what you should be doing with them. So if a big hurricane is set to hit the panhandle of Florida, right? You might have Panama City. You might have Panama City. You might have, I can't think of anything else. Some of the major, more city areas right along the shoreline, okay? That's where the storm's gonna hit. That's where the storm is likely to be the most powerful. And where it is the most powerful, that is where you're gonna have the larger losses. So, if you don't tell them where you're gonna be, they're gonna move you to where they want you to be. And that could be devastating for you. Now, they can move you out there in a few weeks into the storm. They decide, well, we're going to shift you somewhere else. Well, guess what? Now you need to take all your things. You're going to need a dedicated day to packing your stuff up, moving to a different location. That is a day lost. Just so you can go somewhere else and hopefully make some more money. Rather than telling them up front that I am here to provide a service for your company. I'm going to provide the best service that you're going to get. And I'm going to be located here, X. I'll be here. They may come back and say, well, we already have plenty of adjusters here. Just be like, that's fine. But you don't have any adjusters like me. I'm going to be here. I have never ran into a situation where they didn't respect that move. It's not hard to figure out where the storm's landing. It's going to be landing there way ahead of time. It's going to be you're going to know where it's going to be landing usually a day, 2, 3 days before it actually hits. You're going to have a very good idea. Don't go where they want you to go. Go to where it makes sense. So, next one. Again, this is something that most adjusters, they simply just don't follow. To diversify your client base. What does that mean? That means you do not deploy with one company. I don't care what an IA firm tells you. I don't care if they say, you commit with us, nobody else. I don't care about any of that. And the reason why I do not care about that is because if they make a mistake, if they overstaff, if they over-expect from this storm, then they will not pay you anyway. They're not gonna. You'll be lucky to get an apology from them. But come back next year and commit to only us. That doesn't work for me. So, you diversify who you go down with. Listen, you want to your inbox should be flooded with opportunities. Once those opportunities come in, you entertain them all. If they say, hey, can you deploy with us? Say, yeah, as of right now, I can deploy with you 100%. I'm in. We can do it. Let me see the fee scales that we're working with. Why do I want to see the fee scales? Because we're at a buffet right now. Companies are coming in left and right. Everybody's looking for an adjuster. That's fine. I'm here, and I can service all of them. But I'm only going to service the best ones out of all of them. So if 100 companies reached out to me, and they said that they need help and they want to know if I can get down there, I'm going to respond to every single one of them. And I'm going to let them know that I can commit to them. Keyword, I can commit to them. But I need to know more information. I need to know what type of claims are we working with. Is it homeowner? Is it commercial? I need to know what type of volume they are expecting. I'm qualifying them. What type of volume are you expecting? Oh, well, we have a lot of policies in place, blah, blah, blah. If they don't give you hard numbers, there's something to be said about that. But most importantly, the most important thing is money. What are the fee scales that you're working with, and what percentage are you offering? At that point, if they're unwilling to show you the fee scales because they want people that are just going to blindly have faith in them, blindly commit to them, that's fine, but that's not for me. I need to know ahead of time what I'm working with. So I need the fee scales. I need to take a look at them. It's at 60%, 65%, 75%, 75%. I need to know this stuff. On top of this fee scale, is there anything else that we're going to be able to charge for? Photos. Mileage isn't going to be a factor, but photos, administration fees, steep fees, things like that. I need to know this stuff. Because if 100 opportunities came in, odds are I might get 75 fee schedules. And of those 75, I might get a response from 75 companies. And of those companies, not all of them will even have a fee scale. They might say, oh, well, we're still working out. It's going to be a CAT event, so things are going to be different. Okay, great. Well, once it's ready, reach out to me. Because I'm not going to be able to commit until I understand what I'm working with. Now, you may get a company that gives you 4 or 5 fee scales from different insurance carriers. That's great. Which one of these are you expecting to get the most volume from? Because bait and switch is real. They'll send you 5 fee scales. 4 of those fee scales are going to be the greatest, highest paying fees that you'd ever see. But then the one will be garbage. And you could bet which one luck would have that they're going to load you up with. Okay? Now at that point, if there's a little bit of blood in the ointment, you need to snuff that out. You don't want to fall for that trick. You let them know flat out, I can't do that one. And if they say, well, we can't really stop you from receiving those claims, it's a lie. They can. You tell them that you can't handle that one. If they say, well, then we can't send you any claims, that's fine. And you know why that's fine? Because you had 75 other companies reach out to you. If they don't want to give you a commitment, then you don't give them a commitment. Then you move on. That's why it's important to have a selection, a plethora of options here. And once you receive all those, that's when you continue to qualify those firms. And that is when you end your qualification with about 3, maybe even 4 companies that you tell, that you say, I am committed. I'm going with you. Now, you tell them that. Now, you might think, well, that could be a disaster. What if you get down there, next thing you know, you have 400 claims? You can't do 400 claims within a reasonable amount of time. That's way too many. Well, that's a great scenario. That is a great problem to have. Now, that being said, that may not happen. And I've said this before. I've used this as an example before of a storm that I went on. That's one of the more recent storms that I went on before I stopped doing storms. And that was when I went down with 3 companies. 3 companies. Most people go with 1. I went with 3. Company number 1 never said a word to me. They knew I was on board. They knew I was leaving. They knew where I would be. Everything was great until the actual storm hit the ground. And at that point, I never heard from them again. Left messages, sent emails, 100% ghosted. What if I only deployed with that 1 company? I'd be right back home. Because who you start your deployment with will dictate who you stay with most of the time. Because every other company that has work in that area will more likely overstaff than they will understaff. And then they will work out all of their unnecessary personnel from there. So if you think that you're going to be able to just easily sneak on with another firm, you might be surprised. But having 3 in the very beginning is going to be much, much more helpful for you. So, in that example, The first one ghosted me, never heard from them again. The second one did not ghost me. I did get claims from them over 2 different insurance carriers. Insurance carrier number 1 had an awful fee scale. Insurance carrier number 2 had a slightly better fee scale, but they were awful to work with. Absolutely awful. I worked with them for about a month before I decided to slow down on them and focus on the third company that I was working with, because the third company that I was working with, that was over a different 2 insurance carriers, and they both paid well and they were both much easier to work with. And that company I stayed with and made a couple $100,000 through the course of a few months, okay? Just off that one company. But if I would have stayed with even that second company, the one with the insurance carriers that were hard to work with, I would have made money, no doubt about that. Would I have made as much as I did with the other ones? No, but I would have made good money, nothing to complain about, but I would have been complaining the whole time because they were difficult to work with. But that didn't happen. I made money off them, but I made a lot more money with a whole lot less stress off the other company. And that's all because I started with 3. Now, if in the less likely event that you do get get the opportunity to get 400 claims dumped on your inbox, listen, you handle that just like you would if that was your local area and you were a daily adjuster. Once you get to the point where you are scheduled out, your days are packed out, and now you're at a point where the earliest that you can schedule someone in is beyond the acceptable time frame for that company, then you tell them that you can't take any more on at that time. That's not a bad thing to say. That's a good problem to have. Tell them you can't take on any more claims and to shut you down. The worst thing that you can do is not tell them that, take the claims, schedule yourself out, so then they're constantly following up with you because all your files are late. And they don't know why, because they think that you only deployed with them. You don't want the companies that you deploy with, and let me emphasize this on Diversify. You don't want the other companies that you're working with to think, or especially to know, that you're working with other companies. When I handle daily claims, I don't want them to know that I'm working for other companies, even if they know that I probably am, because those companies don't matter. What matters is our relationship. I don't need to talk about my other clients to you, the IA firm. All of that is separate. The only thing that matters between me and my client, the IA firm, is them. That's the only thing that matters. Is them and making sure that they get the best possible product within the time frames that they want. That's the only thing that matters. And if I can't deliver on that expectation, I'm going to make it so that it does not negatively affect me. I'm going to let them know, hey, I need to pull the plug for a little bit. I'm going to let you know as soon as I can. Now, I may tell them after a week or so that, hey, listen, I need to extend that a little bit further back because really the other company that I'm working with, they pay better and their claims close a whole lot faster, and I'm going to stick with them for a while, but I will keep you where you are and I will come back and let you know where I can jump back on. That will extend the duration of my deployment. So, diversifying, having plenty of options in your dictated area, you have enough money to float, and you had plenty of options to get there. You are looking pretty well right there. So, during the event, how will you not crush it? Well, let's talk about it. During the event, you will not crush it. You struggle with inspections. You will likely be paid, you will ultimately be paid for the amount of inspections that you complete when you're out on a CAT site. The faster that you can inspect your claims, the more claims you can have inspected by the end of the day. So you want to have as many claims inspected by the end of the day as you possibly can. Now, I say that to also say this. It doesn't mean that you should get in there, not even listen to the insured, and just rush through the entire inspection where you did 15, 20 in that day, but you've gotten 15 bad reviews out of those 20. Because you weren't listening, you rushed the inspection, and you're going to prepare a god-awful estimate because you didn't get enough documentation there, because all you were actually worried about is the next one. I'm not saying that you should do that. But you should understand ahead of time how to get through an inspection efficiently with all of the necessary information so that you can get in and get out of there. Okay? We teach all that stuff here. So, you need to be quick with your inspection. Generally speaking, your inspection should not last more than 30 minutes. Okay? That's the bottom line. Shouldn't last more than 30 minutes. If it does last more than 30 minutes, then you need to either be inspecting multiple buildings, or that you got caught by the policyholder who just had a very, very long-winded conversation with you, which was not driven by you whatsoever, it was driven by them. Then that's acceptable. Otherwise, if you're taking more time than 30 minutes to get a simple 2,000 square foot, 2,500 square foot home inspected, especially if it's only exterior damage, if you're taking more than 30 minutes, then you need to figure out exactly what aspect of that claim that you are taking the most amount of time on and figure out what you can do to dial it back. Because there should be nothing stopping you from doing, especially when you're out in a CAT site where you're going to have a cluster of claims all together. There is nothing there should not be anything preventing you from scheduling it in one inspection after the other every hour on the hour. All right, starting at 7 a.m., 8 a.m., 9 a.m., 10 a.m. Okay, nothing. Then after that, we're going to inspect the claim. Then what do we do after that? We work on Xactimate or whatever our estimating software is, right? And I'm just going to say struggle with software. The most amount of time that you're going to be spending is on, whether it's Xactimate, Symbility, whatever, the estimating software that your client is using. You're going to be spending the most amount of time with that. Now, there's a few things, all right, that you're going to be doing inside of that. You're going to do photos, you're going to be doing the estimate, and you're going to be doing diagrams. Oh, and you're going to be doing a report too, written report. Let's understand something. Out of all these, the report should be the easiest, especially if you're doing a hurricane. Why? Because you should be able to spend an hour or more, hour, 2 hours, taking whatever the template is. They're going to give you a template to use. All right, the independent adjusting company will. They're going to give you a template to use. Before you even get out there, you need to get in that template and reword it to something that fits you. Okay? You need to make it so that you have as much information already loaded into that template as possible, so that all you have to do every time that you open up that template is back out what you don't need. You need to tailor it to that specific event. Odds are they're going to give you a template that they use for everything. And it's not going to be tailored to a hurricane, an ice storm, whatever the case is. You need to make it so that it's like that. You need to use your Xactimate tokens. You need to make sure that it is formulated in a way that is going to create the least amount of time on your part to edit in the future, because you're ultimately going to be doing the same thing on every claim. You might only have shingled roofs. Make sure it already has the language in there for a shingled roof. You may just mainly be doing exterior damage. You're barely doing anything to the interior. You don't need to worry about any interior documentation. That part's done. You're just counting shingles at that point. You need to so you're not going to spend much time on your report. That's going to be easy. Diagrams. Don't do your own diagram. If you're going to do your own diagram, there better be no more than 4 facets to that roof. Okay? Otherwise, pay for it. Because you already have the money, right? Spend $30 to get an aerial image. Okay? That way, you don't have to worry about diagramming. So the next thing that you're going to struggle with, and this is going to potentially take up more time, is your estimate. Now, building the estimate, if you're doing a hurricane, it's going to be much easier, because once again, you're really only doing the same thing. You're replacing the roof. That's it. Shingled, bitumen, whatever the case is, you need to have a macro that's already in place. If you have Adjuster University six-figure macro, you're good. You're just dumping those line items in to the roof sketch that you already bought. You didn't have to take any time to do that. The only time that you spent on the roof sketch was putting the order in for the diagram. You got the diagram, you dropped the diagram in your file, you used your six-figure macro to dump the line items for the roof replacement in there. Maybe you're repairing some siding, you're using the macro. Maybe you got a couple water spots on the inside, whatever the case is, you got the macro. You're dumping them in there and you're moving on to the next one. Now you're probably gonna spend more time than anything else on labeling your photos. And the only reason why I say that is because that's what most adjusters spend most of their time on, okay? We try our best through my training to teach you how to get through your photos as quickly as possible. So all these 4 things here, this could delay you. If you're not fast with these 4 aspects while you're running your estimating software, this is going to slow you down. And the slower you are in the field, the less money that you're going to make. So how do we avoid that? How do we change that around? Well, practice. Same way you get to Carnegie Hall, right? You just practice. Now, the best way to practice is getting paid to practice. And that's handling claims in your geographical area, handling those daily claims. That's how you stay active. That's how you keep that muscle memory alive. You're constantly running daily claims in your hometown, in your home area. So by the time, and I've said this before, by the time a big cat hits, it's like going from a regular season game to the playoffs. Now, it's when everything that you've learned, all those little shortcuts, all the macro that you have, all these things that you put in place so that you can handle more complicated daily claims at a faster rate, now you're in a different environment where the claims are easier, they pay more, and they rack up to more money, okay? Now is when you use all the tricks of the trade. Now is when you really utilize everything you learned to make the most amount of money. So, you're struggling with the inspection time, that'll blow it for you. You're struggling with your software, that's gonna blow it too. Another thing that will blow it for you is anxiety. And now I'm going to build on that a little bit more. Anxiety is going to affect you when you start to let your anxiety dictate your workflow. All right, let me expand on that a little bit more. You have 100 claims. Listen, there's lots of high stress jobs out there. But if you have 100 claims, that is a very stressful environment to be in. Okay, you need to keep your cool through those claims. And you, most of all, need to be communicating with your IA firm. Okay, even if you're not going to be able to get out there to inspect that loss within a week. Even if it took you more than 5 days to send in that final estimate, you need to be communicating. You need to let them know this has been inspected and the final report. Send in a status report, frequent status reports, okay? You can solve a lot just by taking a couple more minutes out of your day to submit a status report, stop the clock, kick the can down the road, something like that. It's just communicating that you're not ghosting them. During a CAT event, there are tons of independent adjusters that are going to ghost the company that they're working for and leave them high and dry and damage their reputation with their own client. Okay, you want to make sure that this company, even if you've been with them for years, that they know that you're not that person. Frequent communication, they're going to appreciate that. Okay, and last thing is volume. Being upfront about your volume. I touched on this when I was talking about diversifying. Okay, when you are maxed out, tell them that you are maxed out. Okay, the number one thing that you want to focus on is having great response times, having great cycle times, okay? Every IA company is different, but generally they all will look at what's called your cycle times. That is how long it takes you to make first contact, how long it takes you to inspect the loss, how long it takes you to return the closing documents or some sort of documentation back to them. They're paying attention to those numbers, okay? The quality of your report, the accuracy of your report, they'll pay attention to that too. But especially during the beginning, they are paying attention to the numbers. There's too many claims to really spend that much time analyzing in depth into each of your assignments. But they will always, even when things are slow, they're going to be looking at your cycle times. So what you need to do is just make sure that you are making them aware that even though you're getting a lot of volume, you are focused on your cycle times. That means if you have too many claims and it's negatively affecting those cycle times, you pull the plug to protect your cycle times. This is when you don't need to be worrying about money. You need, by not worrying about, well, how many claims, if I tell them to stop sending me claims, they're going to stop sending me claims, I'm going to make less money. No. If they continue to send you claims, you are going to bomb. And when they bomb, they're going to pull those claims away from you anyway, and they are less likely to give you more claims. We don't want that. When they look at your cycle times, and it's been a month and they're already sending people home, and they know that you're not accepting claims right now, they know that once you do come back, you have great cycle times. And now, later down the line, when things aren't so busy, that's where they're going to be looking for the adjusters with good cycle times. Now, post-event. Now, I just want to clarify what I mean by post-event. What I really mean is when things are starting to die down. Okay, not completely over. Like we said at the beginning of this lesson, these CAT events, they could go on for years. So when I say post-event, I mean the initial rush, the beginning rush. That's over with. So what do you know how do you know you're not crushing it? Post-event? Well, number one, you're going home. Okay? Especially early, especially within a month. Okay, what you should be getting is the offer to work what's called cleanup. That's the supplements, that's the re-inspections. You want to be a part of that. Don't get me wrong, supplements and re-inspections oftentimes suck, but you're going to get new claims in there too. They're going to be coming in for a long time, especially on a much longer event. So if you're going home, you didn't do that well because you probably didn't diversify. If you diversified and one company said, hey, listen, we just don't have any more claims. Guess what? You're not going home because you got 2 more companies. Okay? So going home is number 1. All right? No offers for more cleanup. No offers for cleanup work. Okay? Post-event, what else? No more companies willing to take you on. Okay? Now here's what you got to focus on. While you were over here pre-event and you were getting all those offers, you never gave anybody a hard no. You just simply said you couldn't right now. You never burned a bridge. You kept the options open. You let them know if you're not going with them, hey, listen, I can't. Things have changed. I can't help you out right now, but I'm going to stay in communication with you in case you need some help down the line once my availability changes a bit. Okay? Notice I didn't explain that I decided I'm going to deploy with another company. No, I just said I can't help you right now. So if I lose a client, all right, I diversified, I did my thing, but one of them dropped out. Okay, I'm looking to fill those shoes with somebody else because I want to stay there for the long term. Okay, now I'm going to all those other people and nurturing that relationship that I had 2 months prior. Hey, it's me. I know it's late in the game, but listen, I'm in the area now. If there's anything that you need help with, I'm not looking for a massive amount of volume. That's okay, but I'm here. I'm here to help. What can I do to help you? That's the message that you want to convey to them. So, but if you're not getting any more offers, that's a wrap. Now, pre-event, we went over this. Pre-event, biggest thing that you need to be on is 100 plus firms. Upwards of 500. All right? Because by doing that, you're going to get several offers. Now you're getting several offers. Qualify. Which offers fit what you want? Okay. Who is willing to give you those fee scales? All right. Then once you have all those options, you start to rank them. Then, at that point, you know where the storm's going to hit. Okay. Let's say it's hitting New Orleans. There's a strong side, there's a weak side of the storm. Any TV, any news outlet is going to tell you about where the most significantly affected area is. Okay, now, if the storm is set to land on September 1st, okay, I want to have my accommodations booked a day or two ahead of time because that is when I am picking my location. Okay? Once that location is picked, guess what I'm doing? I'm communicating with everyone who I qualified. Hey, this is where I'm going to be. I'm going to be right north of New Orleans. This is my location. I'll be ready to accept claims when you are ready. Okay? And at that point, whoever sends those claims first, that's it. That's who I'm working for. Because I qualified 3 companies. I qualified a lot of companies, but I stuck with 3. And that's who I'm deploying with, 3 companies. So then I picked my location. I said that's where I'm going. If that's a problem with any of those 3, don't worry. I got 70-something, 72 more that I can go to because I did my job there. So I picked the location, and then at that point, I'm on the ground running. During the event, I am handling the most amount of volume because here's why. I did dailies. All right, I did daily claims at home. Now, if that is not possible, if you just could not get daily claims at home, that does not mean that you couldn't educate yourself. I mean, I've got a bunch of videos that you can watch. We've got inspection videos at Adjuster University. But worst case, even if you couldn't do that, then you need to double down on your ability to estimate quickly. All right, you need to be estimating quickly. You need to be doing your photos. You need to be doing your report. You need to learn as much as you possibly can because this really matters. Even if you're learning this all throughout the year for no money and you're actually spending money because let's say you're using Xactimate, you're spending $250 or whatever, however much it costs these days. You spend $250 a month, okay? Over 10 months, that's $2,500. That's a lot of money, but you're losing out on more money by not, okay? Post-event, you're staying there. You're working with multiple companies, okay? You got multiple companies still giving you work, doing re-inspects, and working supplements. All right? You're doing re-inspections, you're doing supplements, and you're doing the best. Now, I want to take you through some numbers here. Now, these numbers I'm going to go through here. I didn't make these up. All right? They say people lie, but numbers don't. At the very top here, I don't want you to look at any of this. At the very top here, this is the NFIP fee scale. You could Google this. I'm not making these numbers up. So this is 3 tiers of the fee scale. All right? 5,000 to 10,000. If you write an estimate, doesn't matter how long you took for that estimate. If you write an estimate and the gross loss is 5,000 to 10,000, NFIP, and again, this is the National Flood Insurance Program. You know, if you're doing a hurricane, doing wind claims, this wouldn't apply, but I'm just using it as a fee scale that's readily available online, so you can verify all these numbers. Because these numbers themselves they're very consistent with what you might find during a large-scale CAT event anyway. Okay, so if you write up an estimate $5,000 to $10,000, you're going to be invoicing the independent insurance. The independent adjusting company that you're working with is going to be invoicing the insurance carrier for $1,035. Now, if you're collecting an increased percentage of that because it's a CAT event, you might be getting 70% of that. That works out to $724.50. Okay, now if the estimate that you write is a little bit bigger, let's say it's between $10,000 and $15,000, then that's $1,175 billed to the insurance company. Your cut would be $822.50. Now, next tier up, $15,000 to $25,000. All right, $1,275 billed to the insurance company, and your cut at 70% would be $892.50. Now, let's go through 3 examples here. And the purpose of this exercise is to understand how just small differences can make big bucks. Now, adjuster A is out on deployment for 1 month and is not prepared. He or she just got the chance and went out there. Adjuster B has been out there for 2 months. They were able to squeeze an extra month out of their deployment. They're somewhat prepared. Maybe they picked their location. Okay, maybe they did some Xactimate or Symbility training before they got out there. Now, Adjuster C was prepared. Adjuster C was out there for 3 months, dictated where they're going to be, what area had the most amount of damage, did daily claims, did their training, and was fully prepared for the big game. Now, Adjuster A averaged 3 claims per day. It's pretty easy. I do 3 claims on a slow day. Okay. Now, of those 3 claims, they averaged about $8,500 a claim. Okay, which is slightly above average, right? Even for me doing daily claims in my general area, $8,500 average. That's close to what the real life daily claim average is. So during a cat event, it's on the low side. Okay, now at $724.50 per claim, because remember, $8,500. That falls in this first tier. The $1,035, you're collecting $724.50 per each claim. Now, they're doing 3 a day. Remember what I said. These inspections should not take you more than 30 minutes while you're out there, and you should be able to do an inspection every hour on the hour, assuming that each lost location is 30 minutes or less from each other. Okay, so they did 3. Just do the math there. You could do a 7, an 8, and a 9. Then you could spend an equal amount of time working, getting them submitted. You could work double that amount of time working it and still be ready for dinner at the end of that day. So at $724.50 per claim, you are making $2,173.50 per day. Doesn't sound too bad, does it? Now, expand that over the course of 30 days, because they only were able to stay there for a month. They made $65,205. $65,000 over that in 1 month. Now here's the problem, is that everybody gets focused on that number right there, the $65,000 number, and they forget everything else. They don't go beyond that because they're just focused on how great $65K in a single month is. They're not doing anything to make more, because why bother at $65,000 in a month? So let's play around with what that could look like if you just decided to take a little time to prepare yourself ahead of time. So Adjuster B, somewhat prepared. They stayed out for 2 months, okay? They didn't handle 3 claims per day. They handled 4 claims per day. They squeezed in 1 more. They were able to work a little bit faster than Adjuster A. So they did 4 claims per day. Again, I personally would never go out on a cat site to do 4 claims per day. I'll do 4 claims at home per day and still be done way ahead of time for dinner, maybe even before lunch. But they did 4 claims. Now, they were more trained in estimating. So they weren't writing an average of $8,500 a claim. They were writing about $12,000 per claim. All right, so what does that do? That moves them up. Their average claim was paying them, billed to the insurance company, $1,175. Their cut of their average claim was $822.50. So not a whole lot. It's $100 more a claim, right? That's not a whole lot, $100 more. But at $822.50 per claim, that equals out at 4 claims per day for 30 days, or at four claims per day, that shakes out to $3,290 per day. A little bit better. Before it was $2,400. Now we're looking at almost $3,300 per day. A little bit better now. Now, over the course of 60 days, their cat was $100 $97,400 or just under $99,000 a month. That is a 303% increase. Now, I want you to understand that just because they were there for twice the amount of time, okay, they were able to do a little bit more with the preparation that they had. They did just one extra claim per day, one extra claim per day, and they got more out of their claim to elevate their average claim to the next fee tier. And that allowed them to 3x their income for that deployment. Expand one more time. Adjuster C, 3 months. Very possible. 3 months away on CAT. They were prepared. They know how to handle, they know how to handle claims. They did a lot of Xactimate training. They're quick with their inspections. But you know what? I take that part back. They weren't even quick with their inspections because they only did 5 claims per day. I still do more than 5 claims per day. But they did 5 claims per day and they averaged $16K per claim. Why did they average $16K per claim? They went to the devastated area. They went to the ones that had the most damage. A lot of roofs will get you you'll get $15K on a roof replacement. Throw the fence in there, you're at $16K easy. So at $16K, you're falling in this fee tier, $1,275. All right, that's to you $892.50. That is a $70 increase from above. Not that much, but you're doing 5 claims a day, averaging $16K per claim. That's $892.15 per claim. So over the course of a day, you did 5 of those in a single day. You got $4,462.50, just shy of $4,500 per day gross revenue. Expand that over 90 days, 3 months you were out there. $401,000, $625. Just over $400K. How long? 3 months. Just under $134,000 a month average. That is a 616% increase from the first one, from Adjuster A. So, you're making, by doing your work, by preparing yourself far ahead of time, by spending the money that you need to spend in yourself, by learning the software, by learning the inspection process, by diversifying the companies that you're working with, making sure that you're marketing yourself the right way, because you are doing everything that I stress that you should always do. You're not Adjuster A that just got the call and worked with one company and they were out there for 1 month. They made $65,000 and they think they did really well. You're not even ending with $200,000. You're ending with a cool $400K. Because you did everything you needed to do. You diversified. You had multiple companies sending your claims. When one dropped off, you picked up another. You're delivering a great work product. And you did what you had to do to maintain a 5 claim per average day. I'll do 15 in a day. I'll do 10 in a day, easy. I'll do 15 in a day. I'll probably need a day off in a little bit, but 10 a day I can do. 5 a day, there better be a beach nearby. 5 a day is incredibly possible. This is what you want to aim to. This right here, 400. I don't care about this, 65, don't care about 2. I want 400. I want 400, I want you to have 400. So get ready to crush your next deployment by getting prepared today. All right, well, I hope everybody learned a little thing or two about that one. If you enjoyed this class, drop a comment in the box below. Let me know what you thought about this class. And if you want to become Adjuster C, check out the link that I put in the description of this video to become a 6-figure adjuster bundle. All right, this bundle of courses with it's a lot of the courses that we have at Adjuster University all shoved together into one package. Teaches you sales and marketing for independent adjusting. It gives you those 500 companies that I referred to earlier, okay? How to make your resume stand out, how to make it a six-figure resume, and a whole lot more. It's packed with material, okay? If you enjoy the way I kind of teach and there's the excitement that I'm getting that I'm conveying to you because of these dollar amounts that I'm showing you, you need to get that class. So jump over. The link is in the description of this video. There's a coupon code that you can use. Drop the coupon code in there. It's going to drop it down. Realistically, here's what I want to tell you, okay? If you're over there, you're thinking, oh, well, it's a lot of money. I don't know if I could really be spending all this money on something. I just got let go, blah, blah, blah. Listen, $401,000, okay? Even if you want to talk about the $65,000, if you didn't listen to a single thing I did, if you didn't listen to a single thing I said, you didn't do a single thing that I told you to do, but you got a phone call from one of the companies on the 600 adjuster firms list, and you got $65,000. I think the full cost of everything is like $1,000. I don't even $1,000, whatever it is. It's a fraction of what you would get if you did everything the wrong way. If I helped you get $401,000, are you going to complain that earlier that year you spent $1,000? Let's be honest here. The link is in the description of the video. Drop a comment, guys. Thank you so much for attending today's class. Jump over to the Claims Adjuster Success Network so that you can see the schedule of upcoming classes that are coming. Jump over to YouTube, subscribe to us on YouTube, hit the notification bell, follow us on Facebook. Guys, thank you so much